Good morning, traders. Welcome to StockCast. My name is Todd Derby, along with co-host James Mason, where our goal every day is to bring you some insights and ideas to your daily trading activities. Good morning, James. How are you doing?
Todd, good morning. I'm doing well. How are you?
I'm doing well. So it looks like today, with the FOMC meetings today, they put a pause on the market. There's nothing going on.
Yeah. And that's exactly why I am late.
Well, you weren't late. We've been here working hard for the last 45 minutes. I think we reviewed 212 tickers. We could find nothing of real value to chat about. So we can only work with what the market gives us.
Yeah. No, I actually slept in. I woke up at 8:36, and I was like, F my life.
Not today. I don't want to do the StockCast today.
Well, I was like, FML, I have to get up. I'm already late. I haven't even looked at anything. So sorry guys, but Todd's gonna have to carry the show today. All right. Let me go ahead and share my screen. Let's take a look at the overall market. All right. So looking at the S&P 500. So to start with, the Dow futures are currently down negative 10 points. S&P 500 is up 2 points. And I hate this setup in the market, pre-market. Like, I absolutely hate when it's just flatline like this. These days, if I try to day trade, and I've said this a couple times before already, if the pre-market is like this, where there's no direction, I can't say I've learned my lesson over the years, but because I still do the crap, but I pretty much have learned my lesson over the years. And when these days set up like this, and the pre-market is flat, these are days I usually tend to lose money if I'm trying to day trade, since there's literally no direction in the market. These are the days that cause a lot of choppiness. So today I won't be day trading. Well, I say that right now, but the plan is not to day trade because these are days I lose money, and I don't feel like losing money today. So, all right, just looking.
But there's other days you do like to lose money.
No, I don't like to lose money at all. I'm a sore loser when it comes to losing money. Man.
I do have a ticker that I want to talk about from yesterday. Just take a look at it and then have a 2020 hindsight conversation, because this was just a pure algo manipulation, bend you over and mess you up trade yesterday.
Okay, we'll talk about it in a moment.
All
right. So S&P 500 on the 5-minute chart, you can see we are up around this resistance around 46.46. I do feel that we'll probably pop above it. Now, Todd, you were saying pre-market that Powell is having another speech or whatever today.
Yeah, they're having their meetings. And he's they started yesterday, and then they kick off again today at 2:00. So I think he's supposed to speak at 2:00. So I'm sure there's a lot of people sitting on their hands right now.
Yeah, I don't even bother trying to keep up with that crap anymore. It's the same dog and pony show, and to be frank, it just gets old. It's the same old crap all the time, and they might as well just come out and say, we're going to manipulate the market. Whatever we need to do, we're going to manipulate the market so we win. That's it. So just based off this chart setup, and again, guys, I'm just speculating, so don't make any financial decisions off this because it's not advice. With us being pressed up against this resistance at 46.46, I am expecting that the bell to have a pop. Now, I don't know if that's just going to be like a quick pop, like a flash up and then drop or whatever it's going to do. But I do feel like we will break above this and kind of dance around in this area between 46.46 to 47.06. and then probably around the FOMC meeting, the market is gonna follow my. I'll just draw a line for y'all. Hold on. Let's see. Okay, that's a line. All right, so around the FOMC meeting, the market will probably do this, and then crush your stops. You'll go short or get puts, and then it's going to go back up, and then like that when you're trying to go back, jump back and forth, and then you decide, okay, it's going to go bullish, and it's going to go whoop like that. So just be careful. The FOMC meetings have been known to mess up people's portfolios, and so don't be that person. I've had it happen to me almost every FOMC meeting. So, Brian, thank you for the tip. All right. So, Todd, what was that ticker you want to talk about?
Or put that on the back burner. Take a look at ticker QNRX. As we were opening up the show and talking, this one just did a pop. And see if anyone remembers this ticker. See if it's a familiar ticker for us.
I mean, we've talked about it. I charted it before.
This is. See if anyone put it in the comments if they know what it is. Yep. Dan got it. This is the former APOP.
Oh.
Yeah, I thought that'd get a little rumble out of you.
I can't wait until the day we're talking about a ticker change in POAI. But oh, that's the former POAI when we crushed it and made so much money. All right. So, okay, what do you want me to look at?
It just popped off while we were talking, so I thought it was interesting. But I was just looking at the news. They announced some deal they had with War Farm, but it looks like it's already popped and it's already retracted a little bit. All right, take a look at ticker ESSC.
All right.
So yesterday I traded this one. I was watching it in the afternoon, and I caught it on around 25. Actually, I bought it at 24.7, and it popped real quick. And I sold at 25.8, 25.85, and made some quick cash. And then it took a dip, and I thought about getting back in for round two, and I hesitated, and I didn't. And what you have in the day chart?
Yeah, that was daily. Here's the file.
It just went into a long, drawn-out fade, and it was a lot of people were trying to buy the dip, and they bought the dip, and they bought another dip, and they bought more dip, and by the time they're done, they had a big-ass super dip Sunday.
It was a big old bowl of dip.
Yeah, big old bowl of dip.
Wait, hold on. Let me phrase that. Big old bag of dip.
Big old bag of dip. Yeah. So it was just interesting because this was a hot ticker yesterday, and people were trying to buy the dip. And I think my point I'm trying to make with this trade is that sometimes you have to take what the market gives you and be quick with it. Don't be overly greedy with it. So I mean, I only made a couple $100 on it, but I was happy.
Oh yeah, that's a hard fader right there, man. Kind of reminds me of EFOI that time last year when I tried to trade it.
Yeah, I remember that.
Oh, that was brutal. All right. So, anything else about this one?
No, that was it.
All right. Let's take a quick peek at the comments. So Jolly Roger brings up a good point. Let me mark you this. Let's discuss short squeezes and how often they come around. So the new cool thing, well, it's not so much new, but for a while now, this entire year, the cool thing to say was short squeeze. Everything was a short squeeze. Hell, this would have been a damn short squeeze in everybody's mind. No. Short squeezes, man, they're so rare. And you know what? I'm going to say something, and I know people are going to disagree with me, but I can back it up with a factual SEC investigational report done by the Congressional Oversight Committee. GameStop was not even a short squeeze. Not at all. Now, that's not to say, now, before, I know some people's minds are just exploding right now, and now they are not receptive to hear anything besides their own thoughts. But I'm not saying that there were no hedge funds who didn't get squeezed. I'm saying that the entire trade itself was not a short squeeze. And the reason why is it was being pushed so hard on social media, short squeeze was coming, short squeeze was coming. But when they actually, I wish I would have had that. Moises had sent it to me, our developer. Wish I had that link up so I could give it out. But actually, let me write this down. I'll go back. What I'll do, guys, I'll get that link and I'll update the YouTube description with that link. So hold on. Okay. So anyways, what I was saying was the whole social media push, which started on Wall Street Bets, we all know this, about GameStop not being a short squeeze or being a short squeeze. It was really just a bunch of retail traders in the end pushing up. They went back and there's diagrams on it that they put in this investigational report that actually help illustrate what's going on. It makes it a lot easier than just a lot of fancy talk. But you can actually see, based off all of the buys, the buy orders, people buying shares, people buying option contracts. It was retail traders just all piling in to buy. And shorting was actually just a very small percent of that push. Now, AMC's different story. AMC absolutely was a short squeeze. I know it might sound confusing because a lot of people are going to be like, yeah, but GameStop went higher. That does not matter. It doesn't, just because something goes higher doesn't make it a squeeze. A short squeeze actually has to take place when there are more shorts in the market that basically have the trade upside down to where by the time they start to cover, it's pretty much impossible to cover and break even for them, that they're chasing and just trying to get out of the trade at all costs. And with the retail traders buying on top of it, so in order for them to cover, so let's just say hypothetically they're negative 1,000 shares. And this is just, I know a lot of y'all understand how this works, but there are a lot of people here who are watching this channel who don't. And so they deserve this explanation. So let's say they have 1,000 shares short. So in their portfolio, it would say negative 1,000 shares. Well, in order for them to get out of that trade, they have to zero that out. So what they'll do is they'll cover. And by covering is they'll actually have to buy shares on the market. Now, when they buy those shares, they're not buying them to own them. They're just taking that negative balance of holding those shares because it's a short, and they're zeroing it out. So they would buy 1,000 shares to cover their entire position. But with them still buying those shares, that's still buy order. That still pushes up the market to the bullish side. And then the bulls on top of it buying, and it just accelerates that growth. So that's just a simplified explanation for how that works with covering. Now, yeah, so back to what I was saying with GameStop. GameStop was just a lot of hype, a ton of hype. And, we saw how it worked out. But AMC was truly a short squeeze because those hedge funds held on to AMC. I think, and I'm just saying I think because I don't know. I think that they basically understood that most people were distracted with GameStop and that they were holding on. And so they got away with it a little bit more. But the AMC apes came in and still crushed them. overall in the end. So yeah, I will update the this YouTube video description once the video processes and whatnot. I'll make sure that link is in there at the very top, and you guys can read through it if you want to look at all the analytical stuff and an explanation on it.
I think sometimes when you talk about short squeezes and we see these big green candles, you'll see multiple short positions covering all at the same time, or it's a market cover where maybe a broker is taking control of an account and they're covering for their own risk management, and then you see a parabolic or goes straight up and straight down in the same 1 minute candle.
Yeah, and that's the thing with, if we're just going to be honest, guys, there in 2020 during the pandemic, that was the largest increase of retail traders entering the market. So they entered the market when everybody, honestly, they entered the market at the best time that they possibly ever could. And with retail traders, the only thing that, they know what to do when they first enter a market is to just buy. That's what you're always told growing up. I mean, you buy. So I'm sure at some point they came across this whole thing called shorting within the following months after they started, and it probably just kind of blew their mind. Like, if you look back to when you first started, when you first found out that you can make money by shorting, by a stock going down, I would pretty much be willing to say that you were kind of surprised, like, wait a second, like, how could this be possible? So, we had all of those retail traders jump in, and, they're just buying. And it worked out great for a lot of them. But they came in at a time when everybody was screaming short squeeze. So everybody now thinks that when something has a high short interest, that it's going to squeeze. That's not how this works out at all. It's also one of the reasons why they're taking away a lot of the short interest data. Not necessarily fully taken away, but they have restricted it a lot, and they have jacked up the rates. So we had Alpha Vantage providing us with short interest data on a StockCast platform that we're building. And recently that just, we just lost that data set for the short interest. We were paying $7,000 a year for just that data for short interest. Just the little line of data that says how much short interest there is. So they don't even have the data anymore. But I can get it through NASDAQ now for $7,500 a month now. I'm just not paying it. I'm not paying it. But yeah, guys, just because something has a high short percentage against the float or outstanding share structure, whatever it may be, that doesn't mean it's going to squeeze. These market makers, I promise you, the market makers are smarter than most retail traders. But more so than that, they have the competitive advantage because they control the game. They can get in and out of their trades. They can cover quicker and more smoothly than any of us can.
They also have more information and tools at their resources than we do. It's like playing a poker game, but we only get one card in a hole, and they have two. They have more information. They have a huge advantage.
The way their algorithms are set up is, when we start as retail traders, start dropping in orders, their computers are so quick that it can see your order and then it can adjust their entire position. Nanoseconds matter. I mean, it's just unreal the power that they actually have within their computing power. Like this is not made for us to win in the end.
That's why you'll see positions it'll do a quick drop, and all it's doing is going down there and collecting all those stop losses, taking those orders, and then it pops right back up. And they go, well, they're not targeting Todd Derby with my 500 shares. No, but my stop loss is at a support line that 98% of everyone else can see, and they're around that same area. So he's just going down there and collecting a bunch of retail traders all sitting on a stop loss, and then boom, it pops right back up. Game over.
Yeah. So let's answer a couple or
About 90 seconds away from start of the market.
All right. Rebecca, thank you for the super sticker. Let's see. So I just saw a question from Devin. So the question was, so is AMC done? AMC, I'm thinking the best way to say this. AMC is not going to squeeze. If that's the question you're going to ask, or that you're actually asking about like a short squeeze, AMC is done with the whole short squeeze stuff. AMC's probably going to find some consolidation right here, kind of go up, play around, but in the long term, I think, and again, this is just speculation. I don't know. I'm just going off of what I can see on the chart right now. But I believe it will kind of bounce right in here, play around. But in the long term, just slowly die back off. Probably come back down to around this $14 range in the end. That's just what I see personally. But for all the people who are waiting for the AMC short squeeze of it shooting to whatever number that they had anticipated, it's just not going to happen. And I'm not just saying that against AMC. I'm saying that for pretty much every stock. Like, it's going to be so hard to catch the market makers with their pants around their ankles again to cause something, like, dang, we went to the live market. But anyways, to cause something like AMC to happen again, or even GameStop, even though GameStop wasn't a true short squeeze, but the whole coordination of it, they're just going to control all of it, because if we control it, they don't control it. So let's go ahead and we'll wrap it up right there. We appreciate you guys tuning in today. Sorry for being late. It is what it is. So, all right, guys, remember, trade safe, trade smart. The market is going to get screwy today. Keep this position sizes smaller. That's pretty much the only way to survive in this market now. So thank you for tuning in, and we will catch y'all in the next one.
See ya.